There is a version of the news where you get to read it 400 milliseconds before everyone else does. Somebody built that. And as of this month, they're charging Wall Street trading firms up to $100,000 a month for it. The company is Trump Media and Technology Group. The product is called Truth API. And what it sells is early access to posts from Truth Social's biggest accounts. Most notably, the account of the sitting president of the United States. Not analysis of his posts, not a summary. The raw text delivered to paying subscribers before it hits the public feed. Everyone else is refreshing for free. You are looking at a business model built on a strange asset, the sentences one man types into his phone. And if that sounds like the setup for a scandal instead of a subscription tier, you're starting to see why this is worth understanding. And if you're the kind of person who wants to know how money actually moves through systems, most people only see the headline version of hit subscribe, because that's exactly what this channel is for. Now, back to the phone. Start with the plain mechanics, because the plain mechanics are not, on their own, unusual. Truth API is a data feed. Selling faster access to public information is one of the oldest business models in finance. Newswires have done it for a century. Stock exchanges sell direct market data feeds to firms willing to pay a premium for speed. Bloomberg built an entire empire on the idea that information delivered 10 seconds sooner is worth thousands of dollars a month to the right customer. None of that is controversial by itself. Speed has always been for sale to whoever can afford the invoice, and nobody files a lawsuit over a faster newspaper delivery route. What makes this one different is the source sitting at the other end of the feed. Trump Media's own account is Truth Social's most followed, sitting around 13 million subscribers, and it belongs to a person whose casual posting habit has, on multiple occasions, moved actual markets. Not moved them the way a celebrity endorsement moves a stock a % or two, but moved them the way a central bank announcement does. Go back to the tariff announcement, widely nicknamed Liberation Day. A single post sent stocks tumbling nearly 5% within hours. A follow-up post days later announcing a 90-day pause on those same tariffs helped trigger a 9.5% single-day rally that added roughly $4 trillion in market value in one session. 2 posts, trillions of dollars in swings. That is the asset Truth API is selling early access to, and once you see the numbers next to each other, the $100,000 a month price tag starts to look less like a luxury fee and more like a rounding error against the payoff. So picture the trade itself. You're a high-frequency trading firm. You've paid your $100,000 for the month, or you've locked in a discounted $60,000 rate by signing a 3-year commitment, which tells you something on its own. The company expects this feed to still be valuable 3 years from now, not just during one volatile news cycle. A market-moving post lands in your system a fraction of a second before it lands anywhere else. In high-frequency trading, a fraction of a second is not a rounding error. It is the entire edge. Positions get built and unwound in windows smaller than a human blink. Algorithms react to keyword triggers faster than a person could finish reading the sentence, and the firms doing it aren't guessing at direction. They are reacting to information the rest of the market has not seen yet, which is the exact definition of an advantage every trading regulation on the books was designed to prevent. Think about what that head start is actually worth in dollar terms. If a single post can move a major index by several percentage points, a firm managing even a modest institutional book can generate returns on that one piece of information that dwarf the monthly subscription cost many times over. A $100,000 fee against a trade that captures even a sliver of a multi-trillion-dollar market swing isn't a hard decision for a firm with the capital to make it. That's the kind of asymmetry that explains why subscribers reportedly signed up before the service had even officially launched. The economics only make sense if you assume the feed keeps paying for itself, post after post, indefinitely. Here's where the plain business story starts complicating itself. Trump Media isn't just selling early access to a celebrity's opinions the way a gossip outlet might sell an exclusive interview. It is selling early access to statements from a sitting president that have, in the recent past, functioned as de facto policy announcements. Market moving in the same category as a Federal Reserve statement, not a movie star's tweet. And that distinction is the entire legal argument against this product. Renee Jones, a Boston College law professor and former director of the SEC's Division of Corporation Finance, has pointed to a specific problem buried in federal securities law. The law prohibits trading schemes where non-public information gets used to create an unfair advantage on the theory that sharing that information breaches a duty of trust. Her argument runs like this. If the president's posts are being monetized and some paying customers get them before the public does, that gap itself turns the information into something misappropriated. and handing it to paying subscribers early breaches the same duty the law was written to protect. She has also pointed to the Stock Act, a 2012 law written specifically to stop members of Congress and the executive branch, president included, from trading on privileged information gained through their office. The law exists because Washington already learned this lesson once with a different mechanism and the same underlying problem. Trump media disagrees, and their defense isn't nothing. A spokesperson for the company has argued that Truth API simply delivers publicly available data faster, that everyone can eventually see the same post so nothing non-public is changing hands, and that critics have invented a new definition of insider trading to describe information that was never secret in the first place. Under that reading, this is no different from a newswire selling a faster feed of press releases that are technically available to anyone who refreshes the page at the right moment. The information isn't hidden, it's just faster for whoever pays. The gap between those two positions is where this actually gets interesting, because it isn't really a factual dispute. Both sides agree on what the product does. It's a dispute about what counts as public when the speed differential is the entire value proposition. If information becomes meaningfully private the moment access to it is sold in milliseconds instead of given away for free, then Truth API looks like an insider trading vehicle wearing a data subscription costume. If public means public regardless of who paid to see it first, then this is just Trump media doing what Bloomberg and Reuters have done for decades, with a far more famous byline attached to the feed. Trump media's leadership has been fairly direct about why this product exists in the first place. Kevin McGurn, the company's interim CEO, put the pitch plainly in the launch announcement. Markets already move on Truth social posts, so the company built a direct, licensed, real-time feed of the platform's most market-moving content. Strip away the framing, and that's a company looking at its own most valuable asset, the attention its top user commands, and finding a way to charge for it twice. Once through ad impressions and platform engagement, the normal way a social platform makes money. And once through a data feed sold directly to the traders who most need the seconds, which is a business model almost no other social network on earth is positioned to run, because almost no other social network's top user can move a stock index by posting from his phone. That second revenue stream is where this stops being a Truth social story and becomes a broader story about how attention economies eventually monetize the exact thing that made them influential in the first place. A platform's biggest asset, historically, has been eyeballs. More users, more time spent scrolling, more ad impressions served against that time. This is a different move entirely. This is a platform recognizing that its most valuable output was never the audience watching the post. It was the post itself, and specifically, the head start on the post sold separately from the platform that made the post famous, which raises a question that goes past this one company and this one president. If a data feed reselling a public official's own words faster than the public gets them is defensible because the words were always going to be public eventually, then speed differentials become the new insider information. Legal by definition, priced by the millisecond, available to whoever can afford the invoice, and functionally invisible to everyone who can't. Congressional lawmakers have already weighed in, calling the setup an abuse of the office for personal financial benefit that advantages Wall Street trading desks over everyday investors checking their portfolio on a 15-minute delay. Whether that argument holds up legally is still unresolved, and it may stay unresolved for a long time because the Stock Act has never been tested against a product built quite like this one. If this is the kind of story you want more of, the actual financial mechanism sitting underneath a headline, not just the outrage cycle circling around it. The Sketchbook Finance newsletter breaks down exactly this kind of thing every week. Same depth as the video, but with room for the details a script this length can't hold, including the parts of the SEC's actual complaint process that never make it into a 5-minute explainer. The link is in the description below, and it's free, because the real unresolved question isn't whether Truth API is legal. It's what happens the next time a company realizes the fastest way to monetize influence is to sell early access to the influence itself, and whether anyone with the power to actually stop it is also the one holding a stake in the company cashing the check.